Good morning, everyone, and welcome to the European Crossover webinar. And we have quite a bit of UK data that's come out and still going to come out. We're looking at core CPI, which came a little bit better than expected at 0.3. Retail prices came in pretty much in line. Now coming up at the bottom of the hour is going to be PPI. And actually, this is odd. Actually states it already came out, so I don't know why, unless crazy time difference or something. That doesn't make any sense. And at the top of the hour, we will have Eurozone HICP final reading. And as we roll into the States, we'll have a Canadian CPI and really no US data whatsoever. I mean, mortgage purchases, that's just mortgage purchase index. That's a super low tier, but really just only Canadian CPI, and that's it. So let's take a look where we stand right now. Taking a look at the euro dollar, we actually came back to this level right in here. 21.53, challenge that area. Looks like the high was 21.58. A little bit higher there. I think we actually pushed our resistance up a little bit higher, I think towards around here. But that is a level right there, and we're kind of pulling back a little bit. Considering where risk is at, you would expect maybe we might be higher, but we're not. So that's an interesting sign there. Take a look at the cable. Man, they are still trying to push this thing higher. Holy smokes. And the Aussie coming up, I believe our resistance is right there with this level, I believe. We'll have to take a look. With the analysis, Kiwi, more of in a weakened position. Here's the Kiwi. Dollar CAD, still dipping lower, sucking wind there. Dollar peso, yeah, not a surprise, still pushing lower. Dollar yen just pretty much dead in the water here. And cash dollar index, probably the same thing here. I mean, we didn't even have any changes there. Yeah, we're just lower, a little bit of a mini gap, but not really doing a whole lot of anything. We'll take a look at the indices and where we stand right there. One thing I've completely forgotten has been Bitcoin. So sorry about that. Just been losing a little bit of sight of that. But you can see here, we have not been able to pick up ourselves. We did go and pick up ourselves up about a week ago, and then you can see here we're just kind of stuck in this 35,000 range right here. I actually look at a 2-hour, and we are just stuck in this range of just below 35,000. I guess about 34.8 maybe, or 850 maybe, on up to here 37.3. Take a look from a daily. Which is very quiet. And this is the first time we actually see risk moving higher, and yet Bitcoin not really doing anything. I did hear that Ethereum made a new all-time high. I don't see that here. Of course, it's on a 5-minute chart. So maybe we did go to that newer high. Let's take a look here. I don't really see it here. But we've been kind of quiet from here. We have been able to break higher. Maybe we'll push a little bit lower and talk about the Bitcoin. Moving into the NASDAQ. Well, here we go. This was a huge surprise yesterday. Honestly, I didn't even trade yesterday, and it's a good thing I didn't. The Asian session of the night before, not last night Asian session, but the night before, really threw me off, because one of the things that was really key is that although I told you, I don't know why on Friday this did not show, but this is actually, the close was down here. So this is the 20-day moving average, and we closed, and that's the first time we'd closed below the 20-day moving average in some time. We challenged it, but we hadn't closed above it. below it and for a while, and that opened the door for us to move lower. There's even my arrow. I'm thinking, okay, maybe not today, tomorrow, whatever, but I was expecting us to make a move down here, and we changed everything around. One of the key things that we were looking at, and we'll lengthen this to show, was this 12,832. I said, hey, look, that's going to be key if we close above that level. But to me, the real key, not the real key, that was a major key level right there. But it was on the 2-hour chart. I said, hey, look, we just don't want to get above this, 12,894. And let's move this back up in here. We go 12,894, and sure enough, we did go on and get above that, and that's what we were right here. So we were open to actually moving lower. Now the market did hold from Friday at that 23%, but we had closed below the 20-day moving average. Really opened the door for us to go to 12,658. But in the Asian session, we jumped up like, well, this, initially when we made that jump, I'm thinking, okay, they've done some stops. I remember even thinking this was a good area here. So, okay, they've gone higher. And I remember being cautious, probably one of the times I've been like truly, truly, truly cautious. And we moved higher, and I'm like, okay, when they got to here, I'm thinking they're just blowing stops, but this is really kind of strange. When we broke here, I even missed some opportunities in the early session of us going, on both sides here. But that's fine, because I thought, what's key is going to be, how are we going to close today? Because as I told you before, on the daily, this was huge, this right here, 12,832. But the key was, if we got above 12,881, as long as we closed below it, it could still be okay. I'm thinking, you know what? Just wait for the levels. That's it. Just really, truly wait. Of course, Janet Yellen was speaking to, and that's one of the reasons that risk took off, is because Janet Yellen was really pushing for us, for the U.S. to really spend and go big in the spending. That opened the door for this big extended move. And I just wanted to respect the charts, and you can see we broke this trend line here, and then the market, we had shorts under pressure, and boy, they goosed them good, and boy, at the close, they actually took a dip, a real fast dip, and then turned around and recovered real quickly in this half hour. You see right here, they took a fast dip, they recovered, and in Asia, we've just pushed this higher. I know that Greg was looking, I think his riddle was looking for an inauguration blow off. Maybe we're going to see that. I don't know. But as I mentioned yesterday, I ended up not doing anything. Is the best move that I made realistically, because I just, as I've said in the chat room, I just simply didn't understand it. I didn't know the Asian session threw me off with that big jump. Then we come back. And I guess with Janet Yellen saying, hey, the best thing is to go big in the spending, that really puts some meat on the bone for this to go higher. And the people that got in the way of this, man, they got run over. They got plumb run over. So what are we going to do? The inauguration is in a few hours, a little bit later on. Do we blow out these highs? I mean, but there is going to be, they're looking for extra spending. There might be a little bit of euphoria that goes with that, with the expectation that, hey, we'll get this extra spending. Democrats control the Senate by virtue, it's a tie, but by virtue of Kamala Harris, who would be the vice president, she would cast the deciding vote. So the Democrats have the deciding vote. They have control of the Senate, so they control the committees. They control who comes in front. But it's still not anything easy. But they are, as I mentioned, with Janet Yellen talking about a 50-year bond, or exploring the option of a 50-year bond, and saying interest rates are low, and with interest rates this low, you got to go big. It really has put something behind us. And so, wow, I mean, the bulls are in control. That's all you can say right now. Is, if you look, I keep stressing, the best way to trade these indices is just go with the technicals, and certainly they've got the wind at their back right now, and that's where we're at. So let's just go and take a look at that kind of gives us, like a little bit of a story of what's up. Let's go to the news, and then we'll move into the analysis. So the Aussie dollar edges ahead. Upside risk seen for the jobs report. The Aussie and New Zealand dollars edged higher on Wednesday as the prospect of aggressive fiscal stimulus in the U.S. bolstered the global outlook, while economic news at home remained mostly positive. The Aussie inched to 77.12, having found solid support at around 76.50.60 in recent days. It faces resistance at 77 and a quarter. The Kiwi stood at 71.26. Settlement was supported by declaration from Janet Yellen. I meant to say sentiment. Sentiment was supported by a declaration from Janet Yellen, U.S. President-elect Joe Biden's nominee for Treasury Secretary, that the government had to act big on stimulus. A surge in the debt funding spending will be positive for the global economy, and commodity prices with more money printing could put pressure on the U.S. dollar. Commodities saw the benefit, oil prices climbing anew, while an auction of dairy, New Zealand's biggest export earner, produced a sharp 4.8% rise in price. Certainly wasn't seen with the Kiwi, though. In Australia, a survey of consumers showed the recent outbreaks of COVID in Sydney and Brisbane had a predictable effect on sentiment, though both have since been contained. More tellingly, the latest government data on the payrolls pointed to an upside risk for the December jobs report due on Thursday. The median forecast was for employment to rise to 50,000 and unemployment to drop to 6.7%. We have revised up our forecast for the December employment to around 100,000 from 50,000, said Nomura economists. While stronger employment may have been associated with the higher participation rate, a gain of this magnitude suggests downside risks around the consensus estimate that unemployment fell by 1/10 in December to 6.7%. The Reserve Bank of Australia has made lowering unemployment its central goal, so a strong report could add speculation it might not need to extend its $100 billion buying campaign past the current cutoff date of April. Most analysts still assume it will extend the program, if only to lessen upward pressure on the Aussie. And the dollar squeezed anew as stimulus hopes brighten the mood. The dollar came under gentle pressure in Asia on Wednesday, and the euro found support as investors were buoyed by the ebbing political turmoil in Italy, improved sentiment in Germany, and renewed focus on U.S. pandemic relief spending. While the world will be watching Joe Biden's inauguration as U.S. president and noon in Washington, traders were more focused on his policies than the ceremony. U.S. Treasury Secretary Janet Yellen urged lawmakers to act big on the stimulus spending after confirmation hearing and said she believes in market-determined exchange rates. The dollar index backed away from a one-month high after remarks, and benchmark 10-year yields, which have lately surged on borrowing expectations, slipped a little in the steadfast session. The euro climbed as high as 21.50, having extended gains overnight when it bounced off support. The risk-sensitive Aussie and New Zealand dollars edged up, also modest gains. We think Yellen is at best indifferent to a weakening dollar, and that in itself it may be insufficient to turn the tide, said bank strategist Terence Wu. Coupled with the market refocusing on fiscal stimulus, the underlying risk-on weak dollar dynamic may reassert dominance, he said, leaving the bank bearish on the dollar as the effects of the recent gains in U.S. yields fade. Positioning data shows investors overwhelmingly short dollars as they figure both budget and current account deficits weigh on the greenback. Analysts at Nomura said last year's downtrend might resume again soon, and were confident enough to suggest adding to the bets, and the greenback will drop against the South Korean won. The euro was steady on the pound and held gains against the yen. Safe haven yen had been sold broadly as risk sentiment improving mood on Tuesday, but caution in Tokyo, where equity slipped, supported against the dollar. Sterling was rose marginally to 36.51, drawing support from a prediction from the Bank of England's chief economist that Britain's economy would begin to recover at a rate of knots in the second half of the year. So with that, we'll move into the analysis. Let's get going. Bear with me. Arena says, can you please take a look at more on Netflix? Could be good to go long. Yeah, Netflix is they got that earnings, not earnings, but they went cash flow positive. They're looking to go cash flow positive, and boy, this thing really took off like a bandit. I think it was up 12.5%, something like that. There, I believe they said that the all-time high was around 575. We're close to that, so they said that's a key to look forward in this session. We will take a look at Netflix. We haven't looked at it in a little while, and Mark says, can you please take a look at gold? Many things. Sure, we'll take a look at gold right now. So bear with me. Let's click on to gold. I'd already rolled to April gold. I did see some people still referencing February, but even then you would be rolling into April like by tomorrow at the latest. So hang on. Let's take a look at gold. We did take a look. We talked about gold. Remember, we said, hey, look, it's holding up pretty well. But what we need to do is we need to get a close above 1860. Well, we're doing just that. We're up. April gold right now is up actually $16 even. You can see that right now. Got a nice little hammer. Well, with the help of Janet Yellen, I think you could push a little bit higher. If it really wanted to take off, we should be already above 1860. We probably should be above right here, this area. You see right here, there's the next key level. We'll take a look at it right now. That's essentially 1869. So this is where it's good that we're off these lows. Remember we said, hey, we're holding this 1816. Remember that was yesterday. But with the good news, with Yellen saying, hey, we ought to go big, a lot of spending, blah, 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 we should be pressing up. We really need, we talked about need to get above 1860. We're there now, but we're not above it yet. But today, we really need to close above this 1869 to get things kind of cooking, where you get a little bit more momentum. It's good that they came off those lows. That's fine, but they do have news why they came off the lows, which is this, I want to say stimulus, for lack of a better word, is just that. With this extra spending, we should see a bigger move than this. It's almost reminiscent of Bitcoin, which Bitcoin is somewhat lackluster, except the gold is even more lackluster than Bitcoin. Still worried about gold. When you look at it overall, it doesn't look good. You see here? So if you're long, you could tighten stops, but by the end of the day, considering where equities are right now, this market needs to be above 1869. To be quite honest, it's a little bit of a disappointment. We're not even higher right now. So we're at 1860. If you're already long, you could take some off around here because there's going to be some resistance. We talked about that. And the next level is 1869. If you're long thinking you want a bigger move, we really need to close above 1869 today. That might seem like a bit of a stretch, but we need to spark for the short covering, because when you look at this, bear with me. It just doesn't look good. You see that? When you look at it, like, wow, that doesn't look too good after all. You see? So for starters today, we really need to close above 1869. That would generate some momentum. Then we could make a run, which is this key level, which would be 1901. But we got to get where it's okay. It's good that we're we're trading like 40 cents over 1860, but that's really not enough. It would be enough if we didn't have any news, and let's say the dollar was stronger. We'd be saying, well, you know what? It's kind of making a difference, kind of holding its own against everything. It's not. The dollar is a bit weaker here, not a whole lot, but it is weaker. And Janet Yellen says, we got to go big. We got to spend big. And look, nothing out of gold. You see what I'm saying? And when you look at this technical picture, that doesn't look good at all. So you could end up seeing the market kind of hold its own around here and then eventually kind of roll back potentially. Right now we're doing okay, but you really need to see this market close above 1869. to really garner some momentum. So there we are on gold. Let's go and move into the euro. So the euro rallied on Monday as equities went risk on. Resistance on Wednesday, because I meant to say Tuesday. Resistance on Wednesday will be 21.79 with support at 20.96. Well, I adjusted because this was the level right in here, right there. Actually, our resistance, remember, it was 21.50. Yesterday, the high was 21.45. And I looked at this, I go, okay, that'd be 21.60, but the market was holding up pretty well over Asia and said, well, you got to give a little bit of more room in case they do goose some stops. Plus, we'll risk on. So I didn't want to go overboard and say, oh, here's the real resistance, 22.05. But I did move up to this next level right there. And that gave us, let's go back to this. You can see right there, 21.79 with support at 20.96. It's not moving as much as you would have thought. But think of it this way. That would be your risk level. If you were to get short, you could, up to 21.79, you get above that area, then you got to get the hell out of Dodge. You see, and that's that high right there too. That high is 21.78, I believe. See right there? And right there, this level. There you go. So as long as we don't close above that, that would be your risk level. You can look at it that way. It's like, okay, I'll short it if you're inclined to do so, and with a daily stop close above 21.79. So as long as it didn't close above that. Support 20.96. We did adjust this higher. Onto cable. Well, we're pushing higher here. Cable saw a mild positive follow-through on Tuesday. Here's that mild positive follow-through. Resistance on Wednesday will be 36.64. Well, we're doing much better than that right now. We're 36.90 with support at 35.58. Well, you got to respect where we are realistically. So I was looking for like, okay, we'll push a little bit higher. There's a 36.64, but we are pushing it higher. And at this point, resistance just has to be that previous high right there, 37.12. I mean, we did get this mini hammer, but it looked like the market was a little bit tired up in here. You see right here, we come up in here, we come up real solid, kind of close, a little bit higher, and we break lower. Well, they did come back, but I thought, okay, maybe they'll work a little higher, and we kind of work up in here, we stall, and maybe start to roll over. I think this is more about they're squeezing shorts that are on. So resistance is going to be, we'll go right there, 37.09. Gonna have to respect where we are right now. And support, well, it's going to be right there, 35.74. That's a long ways off. We can actually go with the wicks right here. You see the wicks right here that come across? So that would be support, which would be 36.09. Take a look at the Aussie. So the Aussie held the move that went sub 77 cents. The pair appears to be stunted. Resistance will be 77.72, which is exactly where we're at right now, with support at 76.42. They did get up as high as up in here. Look, actually, you know what? I'm wrong. the high so far is right there. So we'll stick with the 77.72. So the high is even below 77.50. So I was thinking maybe with this risk on, we might get a little extra juice. We haven't got it. So resistance is going to be 77.72 with support of 76.42. Onto the Kiwi. So the Kiwi traded in a 30 pip range on Tuesday. You can see this was really pretty pathetic. And today's almost as pathetic. The pair is susceptible to a pullback. Resistance will be 71.64 with support of 70.51. On to the peso. Actually, it's a dollar CAD. Now, the dollar CAD traded in a stilted range on Tuesday. Support on Wednesday would be 26.65 with resistance at 27.83. And we kept the 27.83. On to the dollar peso. This thing looks terrible. So the dollar peso closed on Tuesday, revisiting the lows. Support on Wednesday will be 19.53 with resistance at 19.76. And dollar yen. Dollar yen is, for the most part, a marking time in a 50 pip range. And this is actually the same identical analysis we had from yesterday. So there's no change. I think we tightened it up a little bit yesterday because we said 363 to 425, and that's going to be where we're at. No change there. In the dollar index, we also had no change. You can see here. And we had 90.33. The low today so far has been 90.27. And upside 90.79. So no changes there. With that, we'll go into the cross rates. Kiwi yen 73.52. I like that. Still stays the same. We're stuck, and then 74.36 on the upside. So no changes here. On to the euro pound. Wow, we have pushed even lower. And we had 88.76. And look, we've broken even lower here. So as the cable has gone or sterling has gotten stronger, and the euro is kind of barely hanging on. So how much further can we go? Is the sterling truly breaking out? I don't know. So we're just going to go with this low bar, which is still above the lows, but we're going to go for that for support, which is 88.60. We'll just have to see how we close the day. 88.60. So I'd be hesitant to be trying to stay short here, although certainly the momentum's going that way. And on the upside, resistance would be right there. 88.82. Seems awfully off the close. That's right there. 88.94. On to the euro odd. Once again, we're sliding again here. And on the euro odd, we had 56.65. This market is really starting to roll back again. We'll keep the 56.65 though. We'll keep that. And on the upside, 57.48 We opened up at 57.56. That's good. So no changes across the board. Taking a look at the Euro Kiwi, which should probably be under pressure itself. Not too bad, but although remember, we know that the Kiwi isn't doing as strong. On the downside, we have 69.50, and actually I like that 69.50 right there. So that'll be fine there for support. Up the upside was 70.34. Today's high was 70.52. Yeah, the 70.34 is just fine. No changes there. We'll move into the Aussie yen. This is holding up a little bit better. We had a resistance at 80.29, and we're going to keep that there. The high to bar today has been 80.32 or 80.33. So that's fine. 80.29 was supported. 79.43. The only difference is we'll increase the support here to yesterday's open, which is 79.59. And on to the guppy. Wow, we are pushing. Of course, sterling is going, just moving higher across the board. Resistance is going to be right there, the high, 42.24. And support right there, the high on that wick, which would be 41.34. That might even be a little bit too low, but we'll go with that. Certainly doesn't look like things are going to turn around. And lastly, starting odd. Boy, this is really starting to push higher. I think I saw where Stelios got long. It's looking pretty good, got to admit that. Support is going to be right here, and even then, that seems almost too low, but right there, 76.30. And resistance, immediate resistance can be right there, 77.58. That's going to do it there. On the bias chart, let's just go and take a look at where we stand here on the Fangman. Oh, and I really wanted to look us to look at Netflix. We haven't taken a look at Netflix in a while. Something doesn't seem right here. Oh, unless because he jumped in after hours trading. Let's go into the 2-hour. There we go. You see that? Bet some of y'all are like, whoa, what the heck just happened? They look like they're cash flow positive, and they're looking at their debt, and they're going to be able to pay off their debt with with the money that they have on hand. It's like a lot of craziness. If you watched Fast Money, they had it on. They were discussing it. So the all-time high is here. You see 575. Let's see where we're at right now. You can see right there, 575. On the 2-hour, we're at, see that we got up as high as 568. So you want to see if they get up to that 575. No, I would not be buying it at this point. It's already had the run here. So the key will be that how they mark themselves up at that 575. But we are trading right now at 567. Well, the high was 568. It's trading right now at 561. So that's where we're at right now. Right now, we're right there. They might try and challenge that 575 on the open, but I wouldn't look at it beyond there. You see right there. Let me try. We're trading right now at 561. High in the after hour session was 568. They're looking solid as a rock. So we shall see, but yeah, it's looking pretty good there. So that takes care of Netflix. Apple, we're not even above 129 yet. Yet the Nasdaq is at all-time highs. Microsoft, we're above 216, but once again, look, we're not even up here at these highs up there. Look at Amazon, we're still stuck in the lows. Google's holding up relatively well. Nvidia, look, you see, this is a thing that's been kind of a really a thorn in my side for me, in the sense that one of the things is when the markets were like about a month ago to 2 months ago, it was trading really well with the Fangman. But right now, the markets are moving more mainly on the pandemic stocks. And we'll move to that. You can see here Tesla 842. Look at PayPal. You see, look at PayPal. Now that's reminiscent of where we're at with the NASDAQ. You see how these pandemic plays are the ones that are ruling the roost. Look at PayPal. Look at Peloton here. We did come off of those lows. We'll take a look at eBay. Look at eBay. Solid close. All these pandemic plays are the ones, and the NASDAQ is moving to these, which really just has me a little bit, I wouldn't say flat-footed, but it's had me over the last week really like looking at some of these moves. Like if you look at Apple, and we'll take a look at these on the daily. Let's move these to daily. See, when you look at the daily, look at Apple. Trade at 126. We're even below the key 129. And here's NASDAQ at all-time highs. Here's Microsoft. We're just at the 216. We are a little bit above it right now in the after hours. We're not even up here at the all-time highs. And NASDAQ's already gone beyond its all-time highs. Look at Amazon. 3120. Where's the all-time highs? $375 higher. You see? Google now is at least closer to it. So Google would say, well, okay, that makes some sense right there. And NVIDIA and Facebook. Look, Facebook did recover a little bit here. So that's what I'm saying. It's kind of thrown me off and kind of made me scratching my head a couple of times. I'm glad, like I said, I just respected the levels and said, hey, where are they at? Talking about the NQ. But it's the PayPal, Peloton, eBay, that are making these moves to a certain extent. Obviously, Netflix followed through, but it's been dead in the water. But that's what I'm saying. It's just odd that, I look at the Fangman, but they control the majority of a percentage move, yet they're not up here. It's everything else is driving. So it's really an interesting dichotomy. But we'll see whether or not we get this blow off for Inauguration Day. Certainly the Bulls are in control, but that's what we have. I'll get the bias chart posted. And thanks for joining us here on the European Crossover webinar.